I know. There's the headline, right? You won $1 billion, but you walk home with blah, blah.
250 million.
Editors, are you listening?
Yeah.
We have some advice for you. We have some advice for you as well. Don't go anywhere. We've got another hour to come. Lots more on Bloomberg Business Week.
That's crazy. Isn't that crazy?
Absolute.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hi, everyone. Bloomberg Business Week continuing on this Thursday, live in our Bloomberg Interactive Broker studio on YouTube and Bloomberg Originals. Carol Masser along with Matt Miller in for Tim, who will be back next week, by the way.
Tim will be back on Tuesday.
Dun, dun, dun. Can't wait.
Does that mean I have to do this on Tuesday, or?
No, I don't need to talk to the bosses about that. All right, coming up, we're going to talk about Netflix having, I think, its biggest drop of the year. We're going to get into that disappointing outlook. Or no. Did we talk
It was
Netflix?
the biggest drop of the year.
We talked Netflix. We're going to talk Tesla.
It was the biggest drop since December.
We're going to talk Tesla, actually.
We will talk Tesla later as well. Also a big drop today.
It's been one of those days.
But they both have had killer years.
Exactly.
So,
perspective, everybody. Yeah. Look at the year to date. The Business Week cover story. It's on WW, and it's high hopes for trendy obesity drugs. You and I have talked a lot about this story.
Yeah, and I'm in the market. So if anybody knows where I can get some off-label Ozempic on the cheap.
Really, Matt?
A little bit,
We're going to talk about that strategy and what it means for the company.
Yeah.
All right? Focus. We've also got another voice on the startup community and the role of venture capital debt, VC debt, runaway growth, capital founder David Spring. He's going to stop by. First up, though, some earnings news after the close, so let's get to it with Charlie Pellet.
Hi, thank you very much. Lots going on today. Got to begin with WW International. Topic we'll be talking about down 2.8% today. Netflix, you guys are talking about that, down 8.4%. Tesla today down 9.7%. But yes, those year-to-date numbers so far this year, Netflix up 48.3%. Tesla year-to-date up by 113%. Equities and treasuries fell as investors digested a round of disappointing tech earnings and fresh signs of labor market resiliency that could support another hike in interest rates this year. S&P 500 index down 31 points today, now at 4534, down 0.7%. Interesting day, though. Split market with the Dow up 164 points, up 0.5%. Nasdaq down 294, a drop there of 2%. 10-year yield 3.85%, with a 2-year that's yielding 4.83%. As for the broader market backdrop, Linda Dissel is senior equity strategist at Federated Hermes.
Well, some of these names are in the Magnificent Seven, and they were easy to jump onto when the market was going up straight almost for 3 months in a row. I think it's very expected that we should have a consolidation in here, and not to talk about any company on a name-by-name basis, but the healthiest thing would be that if money started to flow into other areas of the market and broaden.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. One sports note, NFL owners have unanimously approved the over $6 billion sale of the Washington Commanders from Dan Snyder to a Josh Harris-led group. That according to ESPN. Recapping stocks mixed, S&P down 31, down 0.7%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
What stood out most is that obesity is a chronic condition. It still hasn't been addressed truly in that manner, when in fact for over 10 years it's been scientifically recognized as a chronic condition. And so we wanted to enter the space and be able to extend our toolkit to not only behavior change and functional, but also clinical interventions.
All right, everybody, that is the voice of WW CEO Seema Sistani on the company and its CE, and really the company's hopes and her hopes for trendy obesity drugs. That strategy at WW is the subject of this week's Bloomberg Business Week cover story. She is betting that new products such as Ozempic and Wegovy can help lift the 60-year-old company to new heights if they don't kill it first. So this story, it is in the upcoming new issue of Bloomberg Business Week. It is already already on newsstands, online at Bloomberg.com. /Businessweek, and of course on the Bloomberg terminal. So let's get to it. The team of reporters on it, Bloomberg News healthcare reporter Emma Court and startups reporter Ellen Hewitt, along with the editor of Bloomberg Businessweek, Joel Weber, here in our studio, along with Emma, and Ellen is on Zoom from San Francisco. So Joel, Matt and I have been talking a lot about this story and their strategy.
So I call them Weight Watchers. You know, they did do this rebranding. They called themselves WW, the ticker's WW.
Silly.
But Weight Watchers,
Yes.
That's what it is to me. And it's been around since the, 70s, right? And even longer, sorry. And what's been interesting about this is, like, I think it speaks to a brand that has this certain heritage. Everyone knows the name Weight Watchers, right? And they had a tried and true kind of methodology and gained legions of fervent fans because it worked. And anytime you're dealing with people who are fighting weight and trying to lose weight, if you give them a tool that works, wow, that's a magic little charm. So there's a ton of people, and there's investors who have been huge fans of them forever. And then along comes science. And what we've seen with these drugs that can be used for weight loss, and Wegovy, Ozempic, we've written about them before. Pharma has high hopes for these. It takes the Weight Watchers kind of business model and it really puts it in an existential moment. And so, Emma, what did they do about that?
So Weight Watchers ended up essentially acquiring this telemedicine company that prescribes these medications. And one of the really interesting things that I think Ellen and I kind of honed in on in our story was the sort of backlash that this sparked among members, right? Like, Weight Watchers has this enviable community, this enviable fan base, right? There are Weight Watchers fans who have been on and off this program for their whole lives. And they were saying, wait a second, this is not what Weight Watchers stands for. Weight Watchers stands for making changes to your lifestyle. What's this shot you're talking about? And so we tried to sort of tell this story of, the new CEO, Seema Sistani, who's a sort of classic Silicon Valley type who comes in, leads this big acquisition, and about the way members are responding to it, and some of the big questions too about sort of what does this mean for this business model? Is this going to work?
Yeah, what's interesting is she actually used Weight Watchers I think after she had a baby.
So Ellen, can bring in a little bit of the Seema backstory. Who is she, and what's been her approach?
Yeah, she has a really interesting resume. She's, she had worked at CAA, she worked at Tumblr and Yahoo in the time that Yahoo was buying Tumblr. And then she's most known in Silicon Valley. I actually remember meeting her 5 or 6 years ago in this role in which she had co-founded this very buzzy group video chat app called House Party. It's kind of in the era before group FaceTime. That was really popular with college students and gamers who were interested in chatting while they played games. And so House Party was eventually sold to Epic, and its service became integrated in part of Fortnite. And then Epic shut down House Party, the service, as a couple of years ago. And Seema had stayed there as an executive at Epic for a while, and then when she left that role, and her next role was, she kind of phased out at Epic and then took this job at Weight Watchers. And I think what's so interesting about her, and something that came up when Emma and I were reporting the story, is how much she's angling herself as like taking this very bold bet. Like when they talked about this decision to go into weight loss drugs, they talked about how it pulled very well with people who had never tried Weight Watchers and people who had tried Weight Watchers but lapsed, but it did not pull well with their current customers, many of whom, as Emma described, were feeling emotionally, I think, quite betrayed by the move. Joel, as you said, weight loss is a really emotional thing. It's very personal. It's very intimate. It's very emotionally fraught.
I mean, especially if you go at it the way Weight Watchers people do, right? They go to meetings and it works, but you have to stay in it for like ever, right? So it's kind of I don't want to say it's a cult, but it's like you work at it and you spend time.
Right. It's a community.
Yeah. But with Ozempic, you don't spend time, you don't have a community, and you don't work at it. You just give yourself a shot every week.
Be a lonely billionaire named Elon Musk.
So I don't understand, and this is what Carol and I were talking about. How is that a good business model? There's 100 places I can get Ozempic.
Well, if I may, health reporter here, the Weight Watchers line, the company line here is, look, these are drugs that are supposed to be used alongside lifestyle change. Like, this doesn't make the Weight Watchers model defunct in their telling, right? You are supposed to take these drugs and change the way you eat and exercise and do all this stuff, because when you lose weight, you can lose muscle, you could run nutritional deficits. Like, there are other things involved than just weight in your health, obviously. So that's the company line. I think, at a philosophical level, though, you're talking about the thing that excites people about Ozempic is not, oh, I want to get on Ozempic and change my diet, right? Like, people don't get excited about that. People get excited because it feels like a magic pill or a shot in this case, right? People are excited because, oh my God, maybe I don't have to like sweat it out and go to my Weight Watchers meetings and count my points. Like, maybe I can just lose weight magically,
Well,
and by the way, people I know who use Ozempic, that's exactly how it works.
I know people who
they change their lifestyle 0%. They use Ozempic and they look 1,000,000 times better. So I'm not saying they're not going to die of cancer 20 years in the future. I have no idea what side effects it's going to have, but it seems like a magic shot.
Well, and it has
what
been
was so
approved.
interesting was
Go ahead. No, come on in, Ellen.
I was going to say that Emma had interviewed this woman who took had been a Weight Watchers customer and actually became a Sequence customer as well. That's the company that Weight Watchers acquired, and she did go on some of these weight loss drugs. And what was so interesting, and she's the end of our story, she talks about how that sense of community, which, as we all know, Weight Watchers really managed to monetize quite well. She was finding that sense of community on TikTok. It was like trading tips with other users who are sharing what it's like to go on Ozempic or Mounjaro or Wegovy, and she's finding that community elsewhere, which I thought was an interesting example of kind of our digital age.
That's my Weight Watchers meeting.
Go back to Weight Watchers. So are they getting rid of all the meetings? Are they shutting down?
They're not getting.
And what about the points?
Yeah,
they're not getting rid of all the meetings. They did shut down quite a lot of their in-person locations, partly because they were paying a lot for, kind of leasing out these spaces, and they couldn't keep it up anymore. COVID also kind of really threw them for a loop. If you think about a company that was maybe not the most digitally savvy, and then you get into a place where everyone is doing everything online. Noom really became quite popular leading up to COVID, and then getting into that period of COVID, and I think lost a lot of customers to them.
Also incredibly difficult to unsubscribe from Noom.
True, I've done it.
Yeah, wasn't there a FTC complaint or something?
It's not so easy.
Something about that.
Yeah.
But yeah, so the Weight Watchers will still have meetings. They're, in-person meetings, and then they're doing online meetings now, but they have fewer in-person meetings now, obviously. And then they're also still doing the points thing, and I think they want to get people on Ozempic on a new program that will help people with Ozempic do their diet and lifestyle thing.
Okay, so let's talk about the money, because there have been really interesting investors in Weight Watchers over time. What's been going down? What were the ones that jumped out?
You get an Ozempic. You get an Ozempic.
Yeah, I would really kill to know what Oprah thinks about the Ozempic pivot, but we didn't get very far on that, unfortunately.
She's still an investor, though, right?
Oprah, if you're out there, call me.
But she still owns shares?
She's still owns shares, though she's reduced her stake in the recent years, and she is still on the board as of now. But yeah, so Weight Watchers has gone through all kinds of iterations over the years. It was owned at one point by the ketchup-making company Heinz. It was taken private by a group called Artel that was, until recently, its largest shareholder. They actually exited earlier this year, which kind of raises some questions too about a company, a stakeholder that's been in the game since 1999, exiting when you have this big acquisition. They also, so that's been kind of a series of different Weight Watchers chapters, and of course Oprah came on board in about 2015 and purchased a 10% stake.
It's very interesting. I feel like there's not a lot of chance that this company can really do well with Ozempic.
Can I tell you what?
As you're saying, if they're going on TikTok instead of going to meetings, and in fact,
Right,
if Weight Watchers
community.
has also cut down the places where you can have meetings, I just don't really get the point of the company. Like, give me the Ozempic and I'll see you later,
Like
basically.
I said to Matt, it feels like a weight less or losing weight version of like Botox to some extent. You know what I mean? Like Botox, you can now get at your ENT, your dentist, you can get it everywhere. And I feel
ENT,
like
really?
yeah. But I'm just saying, right? It's not like you have to go to a doctor anymore, I'm not saying that they're not doctors, but I'm just saying it sounds like Ozempic is going to be everywhere. So how is that a sustainable business model?
Well, that's one of the big questions we raised in the story is sort of this is a commodity now. You can get it almost everywhere, including, by the way, at a lot of very similarly branded, telemedicine startups. And so it is like, why do you go to Weight Watchers for this? That's the big question, right? And I think their point is like, we're a well-known brand. People know they can trust us. We have credibility. But, I don't know if people are looking for credibility for Ozempic.
Well, I mean, and Ellen, jump in. If you're not looking for credibility, bring in a CEO that was at Tumblr and started House Party. I mean,
Hey,
these
what
are
are you
flash in
saying?
the pan fads or businesses that failed dramatically. I mean, Tumblr was amazing
she
until
would
Yahoo
argue-
bought it. And I mean, right?
SEMA would argue that and they did argue to us that the House Party acquisition was a success, just that the brand was closed and that the service
The exit was
moved into
great,
Fortnite.
I'm sure.
I think honestly, they're trying to refashion themselves. They've acknowledged, SEMA acknowledged to us that Weight Watchers push into wellness was kind of a distraction. Now they're trying to catch up on digital. So I think her plan is like, look, if we can really make Weight Watchers digital offerings better, you build digital community better, which is of course something that she can talk about having done at House Party, then maybe that'll be our differentiating factor. You'll come to Weight Watchers not just to get Ozempic, but also to connect with people on their app and share tips and have that sort of community feeling, which of course so many companies want to be able to monetize. Weight Watchers is hoping that they can monetize it online or on their app.
Hallmark Business Week story under Joel Weber. This is, in my opinion, because look,
I agree.
you have a storied brand that is being disrupted by some force, right? What's the brand gonna do about it? And say what you want, Matt, but like, there's this force out there, and you can either stay with the ways that you've always been doing it, or you can attempt to find a way to address it. And if you don't address it, what do you got then? And look,
She makes that point as well, talking about one business that definitely saw another one coming, right? In the story.
but think
She
about
said,
it.
she said Blockbuster definitely saw Netflix coming.
And look, like Kodak had digital cameras. This is an example of a type of story. And if usually we talk about this in a world where there's a technology company, but what interests me, especially about this category of drug now, is this is pharma, and like pharma, we have loved to villainize pharma. Like, as Emma will tell you, I mean, like, this is an industry that, like, pre-COVID, it was like everybody's least favorite, and they've got a little momentum here post-COVID, saving a bunch of lives, and now it's like, hey, by the way, there's this thing that might make you lose that beer belly.
But it only costs
actually,
$1,000 a month. That's for
And
the
wait till the
mere
limitations that
price of
come.
$1,000 a month.
Go ahead. No.
Well, and look, like
That's a big issue.
there are people here with obesity, and we have not, as a society, really talked about that.
Right.
And this is a wonder drug.
A lot of diabetics using it, and it's a
Can't really
game
talk about
changer.
it, right?
I know that. Joel Weber, Emma Court, Ellen Hewitt, the cover of Bloomberg Business Week. Do not miss it. It's a great read online and on the Bloomberg, and of course on newsstands. Thanks, guys.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 5:21 on Wall Street. We do check markets all day long at Bloomberg. Turned out to be a mixed Thursday. We had the Dow higher, the S&P, NASDAQ. They both declined. S&P today down 31 points, a drop of 0.7%. The Dow up 164 points, up by about 0.5%. NASDAQ, though, had a down day as well. NASDAQ was down 2.1% today, tumbling 294 points. Equities and treasuries fell as investors digested a round of disappointing tech earnings and fresh signs of labor market resiliency that could support another hike in interest rates this year. 10-year yield 3.85% with a 2-year 4.83%. Spot gold now at $19.69 the ounce. West Texas Intermediate crude up 0.5%. WTI 75.65 a barrel. Johnson & Johnson shares up 6.1% today. J&J raised its 2023 earnings outlook after its medical devices unit outpaced expectations. And Kenvue, the consumer-focused spin-off of Johnson & Johnson that owns brands such as Band-Aid and Tylenol, fell today after J&J said it is preparing to launch an exchange offer for its majority stake. Shares of Kenvue today down by just about 2%. Just getting word that Grindr employees are launching a unionization campaign, extending a wave of organizing among tech workers after ours shares in Grindr down by 3.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we love talking about the small business and startup communities. We talked with Jesse Draper last week, who actually is in our weekend show. And then on small business yesterday, we talked with Ben Walter, CEO of Chase Business Banking, who gave us some insight on small business lending, especially when it comes to startups and what not to do. Listen up, everybody.
Debt is not the way to start a business. It's not really that's equity. And there are markets for that. There are ways to raise equity money. Sometimes people do it on their credit card, on their personal credit, and that's okay.
Bootstrapping.
It's bootstrapping. But business credit is really designed for businesses who have been in business for 2 years or more and have cash flow.
All right, that was Ben Walter, CEO of Chase Business Banking yesterday, but we have a guest today who is in the business of venture debt, loans for early stage startups with venture capital backing. Delighted to have with us David Sprang. He's founder and CEO of Runway Growth on Zoom in Silicon Valley. He's got a new book out too, All Money is Not Created Equal, How Entrepreneurs Can Crack the Code to Getting the Right Funding for Their Startup. David, nice to have you back here on Bloomberg. How are you?
Doing very well. Thanks, Carol. It's always great to be with you.
Yeah, it's been a while. If I may, just before we get into kind of the world of venture debt, I'm curious, there you are in Silicon Valley. Is there still any kind of hangover from the collapse of Silicon Valley Bank, a longer lasting impact that you're seeing or aware of? All right, hang on a second.
I think you muted yourself.
I think we've got a little bit of an audio problem, so we're going to hopefully figure that out. They'll check in with David, and we'll get to him in just a moment. But I love talking to folks like this. It's just kind of what's going on with startups. And
well, especially since so many Americans have started new business. I mean, the dynamism of this economy is unbelievable.
You shared with me, Torsten Stock over at Apollo, about 45,000 new businesses have opened every month since the onset of COVID, 50% higher than in 2019. That's massive.
I'm glad I shared it with you, and I'm glad you remembered, because I was thinking, I saw a stat this morning somewhere, and I don't remember what it was.
I listen to you. You think I don't listen to your or read your messages. No, but it's interesting. And when we were talking with Ben Walter of Chase Business yesterday, just as we finished the interview and we were done, we started talking about the startup community. And he said, too, it's been like on fire of people starting up businesses and I guess reaching out to them over at Chase Business Banking. So he is seeing a very strong community. I feel like that's another sign of a
Can you imagine
health of the
450,000 new businesses have opened every month since the onset of COVID-19.
I said 45, but it's 450.
450,000 new businesses a month. I mean, I know this is a big country and we have more than 300 million people, but that's a lot.
Yeah, a lot. So, all right, let's get back to David Sprang. We do have him. He's founder and CEO of Runway Growth, still with us on Zoom in Silicon Valley. So, David, just to go back, I was asking you about the impact of the collapse of SVB, Silicon Valley Bank. Any long-lasting impact that you've seen?
Well, I think there very much could be a long-lasting impact. It's too early to tell. SVB was primarily involved as it relates to venture debt in making loans to very early stage companies, often pre-revenue, and these are generally very small loans. And that is not the business that I'm in. What we do is we make larger loans to much more established companies. And the comment that you played, or the clip that you played with the person from Chase saying that that these companies may be too early for debt, I think that could very well be true. And it will take years to find out if the activity that was dominated by Silicon Valley Bank in making early stage loans, if that's picked up by somebody else, it's not clear. My personal view is that that segment of the market could just completely go away.
So what you're saying is we don't yet know if debt is the right way to fund early stage companies. Are there certain companies for whom debt makes more sense, though, than others?
Absolutely, and Matt, I don't want to parse words, but I'm not saying that debt is not appropriate for pre-profit companies. I'm saying debt might not be appropriate for pre-revenue companies. The average company that we lend to is 13 years old. It's doing more than 60 million US dollars in revenue, and it's raised over 100 million of venture equity. And I think at that point, a company is making a huge mistake by not considering debt after, an entrepreneurial team has given away 80% of the company and they're down to the point that they need their last 20 or 30 or 40 or 50 million. They can use debt and they should consider it. And that's the whole premise of my book, that all money is not created equal and debt isn't right for everybody, but it is something that particularly late stage companies should absolutely consider.
What about when it comes to rates? And I'm just curious how the higher rate environment has impacted that aspect of this.
Yeah, for sure. Rates, as everybody knows, have gone up significantly, 500 basis points. So on the surface, that seems like a lot. Debt is more expensive than it was 2 years ago, but equity is wildly more expensive than it was 2 years ago, largely because valuations for public and private companies are down. And in some of the hottest sectors, it's down by 60, 70, 80%. And the terms and conditions that are being offered with equity are much, much more onerous than they used to be. So even the very best companies are trying to avoid issuing new equity in this market. And so debt is attractive. And, I guess to summarize it, debt is cheaper than equity, and the difference between the two is as high as it's ever been and is widening.
David, do you think that we were just talking about how many new businesses are being formed post-COVID? Torsten Slok sent a slide this morning. 450,000 new businesses have opened every month. That first, I was like, wow, what a dynamic economy. It's a lot.
Sounds good, right?
More amazing than I thought. On the other hand, is that maybe too many? Are too many people going out and starting new businesses?
So I don't think so. I think that you have to have a very wide top of funnel. And of course, not all of those companies are going to succeed. And we're seeing that in the venture-backed market today, where there is a culling of the herd. It's very natural. It's normal. It's to be expected. It's nothing to panic about. And many of the companies that were formed over the last 5 years are not going to make it. It's just part of the world in which we live and part of having such a vibrant and robust innovation economy. And then the other thing, I haven't dug into those numbers, but I would bet of those 450,000, many of them are not even aspiring to become large companies. They could be,
a dog walker, right?
A dog, yes. Great example, Carol. A dog walker. So, that company may never have more than a single employee. So I don't think there's too many. there was definitely a situation in the venture-backed world where, in an environment of free money, that more companies than we needed were created, and we've seen this every cycle. You probably remember back to the first internet wave where there were 10 online pet food companies, and the world didn't need that. Most of them failed, but now there are very legitimate, substantial pet food companies, online pet food companies that will be around for a long time.
Hey, just got about 25 seconds, 30 seconds. David, how much of the companies maybe that you're working with have some AI connection, just quickly?
All of them.
Really? Seriously?
Well, yeah, I don't think any company in existence can ignore AI. So it's certainly not true that all of them are using AI at the center of their business, but I guarantee every CEO is thinking about it.
No, I'm just curious in terms of tapping the markets. So glad we got some time with you, and we apologize for some of the tech problems at the top. So glad we worked it out. David, thank you so much. David Sprang, founder and CEO of Runway Growth on Zoom in Silicon Valley. His new book just out, All Money is Not Created Equal, How Entrepreneurs Can Crack the Code to Getting the Right Funding for Their Startup. And our thanks to Torsten for that data point.
Always thanking Torsten Slok
I know,
from Apollo.
he's always on it, right?
Yep.
All right, everybody.
Let's get a check on world national news right now. For that, we go to Denise Pellegrini in the Bloomberg 1130 newsroom here in New York. Denise?
Hey, Matt, thank you. It's official. The NFL has now approved the sale of the Washington Commanders. The NFL team owners voting unanimously to approve private equity exec Josh Harris acquiring the team from Dan Snyder. The $6 billion deal looks like the largest ever for a pro sports team. It also ends Snyder's ownership, which some say involved more scandals than playoff wins. Speaking of winning, the latest Powerball billionaire is a winner twice over. It all comes down to location. Bloomberg's Nathan Hager explains what's happening.
The single winning ticket for that nearly $1.1 billion Powerball prize was sold at the Las Palmitas Mini Market in Los Angeles, California. And it just so happens California is one of the few states that doesn't tax the lottery. Now, all lottery winnings are subject to a 37% federal income tax. But had that ticket been sold in New York, there would have been a 10.9% state tax on top of that, plus another 3.9% in New York City. The biggest ever Powerball jackpot was $2 billion back in November. Someone in California won that prize as well. In Washington, I'm Nathan Hager, Bloomberg Radio.
All right, thank you, Nathan. President Biden has ordered, as we've been reporting, the creation of a working group to study ways to circumvent future brinksmanship over the U.S. debt limit months after the nation was taken to the edge of default. White House counsel Stuart Dellery, National Economic Council Chair Lael Brainerd, they will be leading this group of Democrats, and the effort will consider actions Congress can take as well as what the administration is calling constitution-based solutions. And live from the British Open at the Royal Liverpool Golf Club, three-way tie for first place right now. Christo Lamprecht, Tommy Fleetwood, Emiliano Grillo in that three-way tie, all at 5 under. I'm Denise Pellegrini, and this is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 5:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks end of the session mixed. We had the Dow higher, the NASDAQ Composite Index, and the S&P 500 Index both moved lower. Today, the S&P was down 31 points, ending the session at 4534, a drop of just about 0.7%. Dow Industrials up 164 points, up 0.5%. NASDAQ down 294 points today, tumbling by 2%. 10-year yield, 3.85%, with a 2-year, 4.83%. Gold, $19.69 the ounce, and West Texas Intermediate crude up 0.5%, $75.65 a barrel. Equities and treasuries fell as investors digested a round of disappointing tech earnings. Case in point, Netflix down 8.4%, Tesla today down by 9.7%. So what about the overall market backdrop and the latest batch of earnings? Emily Rowland is co-chief investment officer at JH Investments.
It's really healthy to see this broadening of market breadth that we've seen as of late. Obviously, some better than expected results out of the financials, signs that there may be a more durable bottom being put in as far as the regional banks go. So we have been warning a potential valuation risk on the mega cap tech side. You know, we like those names, but we've talked a while about diversifying into areas that are actually trading at a discount. Those are harder to find.
And you can hear more of the conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcast. She mentioned regional banks. Today we had Truist down 7.1%, KeyCorp up 4.1%, Fifth Third up 2.6%. All three reporting earnings this morning. After the bell, Capital One Financial reported total deposits for the second quarter that missed the average analyst estimate. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, Carol Masser along with Matthew Miller here in our Bloomberg Interactive Broker studio on YouTube and Bloomberg Originals. Hey, we want to talk a little bit about Tesla because we did see that stock certainly come under pressure in today's session. It looks like it is down the most in about 3 months here, down almost 10%, Matt.
Elon Musk lost $20 billion today.
That's a lot of money.
That is a lot of money.
It's a lot of
but
money.
He's done
okay this year.
$234.4 billion left.
Yeah, stocks up more than 110% this year.
Yeah.
All right, so let's get to it. They did report after the close yesterday, Elon warning of some more blows to profitability, which is not necessarily what you want to hear. And I want to know more about this Dojo supercomputer.
Me too. That's what I'm most interested in. I mean, when the earnings release came out yesterday and I saw the headlines with all the numbers, I was like, yeah, same old. You know, we read them off. I don't even know why we read off all the earnings numbers instantaneously.
Because that's what we do.
As if some investor is like watching TV or listening to the radio for earnings.
Don't you dare poo-poo us.
But
yes.
When I saw the Dojo computer line come across, I was like, cool. Supercomputer. Supercomputer.
We were all kind of like, Dojo? All right, so let's get to it. Sean O'Kane is with us. He's EV reporter at Bloomberg News. He joins us on the phone from Austin, Texas. So, Sean, you know Matt wants to start with Dojo, so let's just start with Dojo.
What is the Dojo supercomputer?
I mean, you can think of it like a massive bank of high-performance computers that are operating together to, in Tesla's case, you know, sort of parse, understand, and do all sorts of work on all the images and videos that are coming off of the cameras on Tesla's cars, to basically take it, put it into a simulation, and let the simulations kind of, you know, test all the different edge cases that a car might run into if it's driving itself. That's essentially what it's built for. And I think it's important to distinguish, it's something that Tesla has distinguished recently a lot, is that this is a very sort of specified purpose, one that they've spent years building to do those things and not to do other things. So like he recently announced this AI company that he's starting that's going to take on sort of the open AIs of the world. He said that this Dojo supercomputer is not something they could actually just leverage out the gate because it's not really built for language. It's built for images and videos. So that's what they're that's what they've been building, and they're obviously still going to do a lot of building because he said they're going to spend more than $1 billion over the next year on it. So they have a lot more work that they think they can do on it.
But this is one of those cool things that differentiates Elon Musk and Tesla from other car makers, Sean. I mean,
because of Dojo?
Does GM build a supercomputer to analyze the video from their cars? Like, I doubt incumbent automakers would even be allowed to do something like this by their boards. And Elon just does whatever he wants. How cool is that?
Yeah, this is more something that companies like Waymo or, it's not GM proper than Cruise, their sort of dedicated self-driving unit. This is the kind of stuff that those divisions or those companies are doing. Although I'm sure Elon could spend hours telling you why their solution is better versus those competitors. So yeah, this is obviously something that they feel comfortable throwing a lot of money at. I mean, I think it's important to remember that it really wasn't all that long ago that they didn't have a bunch of free cash to throw around at projects like this. And so it's really the success of the Model Y and also the sort of geographic diversification, all these different factories that have put them in a position to be able to spend resources on projects like this in a way that they never used to be able to.
One comment. So this news says to me, go buy supercomputers, companies that make supercomputers, and buy cloud, right? Because if he's building, I mean, this is what companies are going to be doing, right?
Well, I mean, this is what he does, and
well, but it's like the same thing, right? I mean, the AI, like, right, they're going to be.
Well, he was at the beginning of that too.
So all right. So one comment, one question. What's Dojo stand for? Do we even know?
It's not an acronym or anything. It's really, think about it like a karate dojo. That's why they named it that. This is a place for them to sort of throw the data in and be able to train it, just like
it's a place where you go train. It's for training.
I don't know that. I don't know that. All right, so let's go back. Earnings, the results.
Why have the shares tanked so much?
Is it the squeeze of margins and profitability?
I think there's two things related to that. One is I think there had been a leveling off of the price cuts. Certainly the last quarter we didn't see as aggressive price cuts as we had at the end of last year and the first quarter of this year in the consistency and size of the cuts. So Tesla there had been some cases where they had sort of popped up prices a little bit, $700 here, $1,000 there. So I think people were expecting a leveling off there and maybe not expecting Musk to take such a hard line on it. If the Fed keeps raising, we'll keep cutting. So I think that probably spooked people a little bit, thinking that the margins could drop a little bit more. But I think the bigger thing is just, we have to remember, like, they've been on this big rise, as you mentioned, over the last couple of weeks and months. And so there was, maybe this was a bit more than people were expecting. But I think, some of the people that I had spoken to in the run up to this were expecting a paring back of some of those gains in the lead up to this earnings call. And it was really going to be up to Musk and company as to whether or not they could sort of plant something in the ground to say that, we're continuing on this path of increasing our valuation. And here's the reason why, this recent run is, nothing compared to where we will be.
I mean, so he was a front runner in EVs, and obviously he's done amazing things with Tesla. But now you've got Volkswagen gunning for him. You've got Ford and GM gunning for him. Even Dodge is going to come out with an EV supposedly next year. So isn't he going to have to give up on 20% margins? Car makers can't have 20% margins unless they're Ferrari.
I think that's a reasonable way to think about it at an extremely broad level. He would argue back to you that the vertical integration that Tesla has done, the dream of Tesla is basically they have a factory where raw materials come out and the finished car comes out the other end in a way that, even the best automakers don't really tend to do. They're not quite exactly at that place yet, but they're getting a lot closer with each new factory that they build. And then you look at their efforts, they're building a lithium mine here in Texas down in Corpus Christi. They are just reaching down into the supply chains in a way. Think about how they were able to sort of redo their chips on the fly and rewrite software for different chips during the chip shortage. They're just involved in the process of making a car at a level that I think even the other OEM CEOs would admit that they're not involved in, because the business model that they've been operating on for years is just totally different with suppliers. So I think that's the biggest thing that lets them keep that advantage. And, you know, we didn't hear much about it last night, but when we hear more about this next generation vehicle in a couple months, we're going to hear a lot more about that vertical integration because that model's ground up. So
he's also not afraid to pivot and do something, you know, for a publicly held CEO, publicly held company. It's pretty stark. Sean O'Kane, thank you so much. EV reporter at Bloomberg News. As we said, Tesla shares down 9.7%.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
5:53 on Wall Street. We take a look at some of our top company news right now. And among the companies out with earnings today, New York-based Blackstone. Jonathan Gray is president and chief operating officer.
This year, you had a lot of concern about where inflation was going, a lot of concern about how far the Fed would go. You had the banking crisis in March, and naturally, you see a slowdown in deal activity. I think the good news is the tone has improved as we've worked through this quarter. The deal market feels like it's unfreezing a bit.
Blackstone became the first private equity firm to manage $1 trillion. Its shares today did decline by 0.6%. American Airlines Group sees profit this quarter in line with Wall Street's expectations. American Airlines shares today did decline by 6%. Among some of the other airline names today, United, which says it's scaling back at Newark. We had shares of United up today by just about 3.2%. Delta Airlines today did advance by just about 0.3%, and Southwest today fell 0.7%. Sources tell Bloomberg the Federal Trade Commission is pausing its in-house trial against Microsoft's $69 billion acquisition of Activision Blizzard. Those are our top company stories at this hour, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody. Carol Master with Matt Miller in for Tim, getting ready to wrap up our Thursday edition of Bloomberg Business Week. Coming up, though, at the top of the hour, Bloomberg Daybreak Asia with Brian Curtis. And Brian joining us now with a preview, joining us, of course, from Hong Kong. And Brian, I feel like a few things on my radar. I'm curious what's on your radar. One story late last night, a Bloomberg exclusive about China considering easing home buying restrictions in some of their biggest cities. A Bloomberg exclusive. I find it interesting. I thought they wanted to kind of slow all that housing down.
Well, they need stimulus now, Carol.
Yeah.
So that's part of trying to free up the property market. And I look at that as, you might have heard me reporting on that yesterday into our shows, because it's really a chance for the strong hands to be able to snap up some property. The curious thing about that story is that if you have any mortgage record, even if you paid it off, even if you don't own the property anymore, you don't qualify as a first-time buyer. Thus, you have to put 80% down in cities like Beijing and other big cities. So they're relaxing that because that's quite onerous, right? You want people, with the stronger hands, with the cash, with the money, with the track record to be able to move on property. So I think that's the effort. Will it work? Well, it's kind of like opening up to the private sector. Another story that we'll be featuring today, we've talked about it the past couple of days. We'll have Ye Xie on from the China Today column at Bloomberg. He's excellent. And the market yesterday just kind of really turned up its tail to it. They just didn't really. Pony Ma, the head of Tencent, was embracing it, saying, this is very good for the country. But investors, they didn't weigh in. A lot of the big private sector companies traded down yesterday.
Can we talk can we talk TSMC? Go ahead, please.
Because before we had a prisoner sighting. One
what?
in the wilds of
what?
One in the wilds of Borneo, the other at St. Moritz. So they both can't be right. We'll have to wait till he's back next week to find out.
I can imagine him in
Borneo.
both places.
I
can imagine. Well,
I could imagine
I see
him both.
Doug Krisner, up on the mountain in St. Moritz, maybe with a
smoking
cigar.
jacket.
Yeah, with a big fur.
Totally.
Yeah.
That's Doug's kind of thing. In Borneo,
he's a lot like you guys. He loves his job so much. He really doesn't even need to take much holiday. And really, I told the bosses, you don't even need to really pay him. I mean, he loves his job so much.
By the way, what's the holiday? What's the holiday and sort of maternity leave sitch in China? I was in Europe for years where we got 35 days of holiday and you got 14 months maternity leave in Germany. It was pretty sweet. And I come back to New York and my vacation days are whittled down to like 2 weeks and I get a couple months off.
It's not 2 weeks. Stop it.
But what's it like in China? Do they have rules surrounding these sorts of things yet?
They don't have a lot of things like paternity leave and that, but they have a lot of holidays. For instance, here in Hong Kong, we have, I think now 17 holidays, bank holidays. So it's a lot of days. Maybe 12 would be considered bank holidays, but 17 total holidays. So that's pretty nice. But China is, they're still working 6 days a week in a lot of the factories, and it's tough sledding there for sure.
Maybe not at TSMC.
I know you wanted to talk about
TSMC,
and I got you diverted with the Krisner sightings. But very important, TSMC cutting the annual revenue outlook. That's a very big thing.
Yeah.
And then delaying the Arizona plant till 2025. It sends a little bit of an ominous message. I don't think it's that worrisome because the 10% decline in revenue, they were already predicting single digit. and everybody knows that that whole industry is recovering.
Yeah.
But it's just going to take more time.
Definitely wait on the semi-sector in the U.S. The stocks was down about 3.6%, but a lot to come, certainly. Brian, thank you so much. I know you're busy there, but good to get check in with you about what's coming up.
Yeah,
Bloomberg
thank you
Daybreak.
so much.
Yeah,
Thank
be
you.
well. Borneo. I think he's in Borneo.
Yeah, I can
Prisoner.
imagine. I can imagine. Also, St. Moritz, this time of year, there's not a lot of skiing.
We're going to find out when he comes back. All right, for Matthew Miller, Matt, have a good evening. Everybody there from the Bloomberg Business Week team, have a good and safe evening. Daybreak Asia, it starts right now.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about about 62 miles. You only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, you know, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's like really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space like really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special, and so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel.